everybody. Welcome to the Wealthy Idiot Show. My name's AJ, and today we're going to talk about cryptocurrencies. We've talked about cryptocurrencies a few times before, but we have a special guest on to give us some information and details around his investing with crypto and the ideas that he has into the whole cryptocurrency investment market. Hello, Ryan. How's it going?
Hey, how's it going? Thanks for having me.
Oh, yeah, no problem. Before we get started, can you tell us a little bit about yourself and maybe your crypto history and anything else that we should know?
Yeah, sure. My name's Ryan, and I will give you a quick background. I come from the digital marketing world mostly, and when I lived in the Silicon Valley area, I was really bad at finances, especially when I was young. And I heard about Bitcoin, and it was one of those things that was floating around for a long time, and I thought it was something like Farmville money or something. I didn't understand what it was. And then finally, when I read a little bit about it, and I dabbled in some programming and things like that. I went to a marketing path instead of the tech path. It seemed to align with me more. But when I heard about Bitcoin, I thought, well, this seems like a good thing to have in my portfolio because it's this borderless currency. And I thought, well, what happens if there was some crazy bank run again or some depression or you need to leave the country? It was kind of in a survivalist thing, but I thought this sort of makes sense to have in your portfolio. It's some type of money that I can access in any country. If our government were to ban it, I can go somewhere else. So I thought it was a good thing. That's what got me into it, and that was around 2014. And I can talk more about that, but that was my background in crypto. Um, but go fast forward, I worked at different startups over the years, and some tech, some not. Worked in different industries, and now I do work at two Web3 companies that are involved in the crypto space, and it's so fun and awesome, and it's definitely a big part of my life, something I think about all the time. And so my fiance said, "You might as well just why don't you work in that space so you kind of stop talking about it like for nothing and get paid for it." So that makes sense, and that's where I'm at today. That's my quick background.
Were you starting to bug your fiance with how much you talked about it?
Yeah, should we have like a deal? Say like, okay, you can talk about it, but you have to like give me a massage at the same time or something like that. So
Oh,
it's
that's
like an
brilliant.
interesting system. Yeah.
Yeah, I get yelled at about my wife about the stuff I talk about too, but that's a good idea. I should try to implement that.
Yeah, I know guys who made like millions in crypto, and they say that they've been with the same person for like 10 years. And one guy I know, he said that she's like, wait, what do you do again? And still like doesn't understand. He's just like, oh man, but it's the way it is. It's all good.
So you said something really interesting there that I thought was cool, and I've tried to explain this before, but maybe it's more complicated, I think, for people to wrap their brains around. People have said that crypto is a hedge against inflation, which is obviously not the case. I mean, we're seeing inflation at a crazy rate, and crypto dropped really quickly. And I think what happened was a lot of people would leverage, so they would take out debt to buy crypto because they thought crypto was going to go up at a higher rate than their interest rate on their debt. And so when everyone was deleveraging and selling off crypto, it caused crypto to drop. So what I said was crypto is not a hedge against inflation, it's a hedge against collapse. And you said something I thought was actually better than what I said, which was that it's a borderless currency.
Yeah, that's a really interesting point. Yeah, because for a long time people said Bitcoin specifically was a hedge against the stock market, and but it seems to be correlated really strongly right now. I guess it depends how somebody looks at it. If you overall Bitcoin has gone up for so long, and I remember when it was $100 and then it became 1,000 and it became, and I mean when you look at it like that, and then went up the way to 67,000. So somebody who's seen it go up like me for a long time, and people have been in it longer than I have, when it was like $1 or something, and they're mining it from their own computer, like nothing. Um, when they see 67,000 drop to 20,000, they can remember when it was like under $100. So to them, they're like, whatever. So, but when I look at it short term, like a year or two, I definitely it doesn't look good as a hedge for inflation. But yeah, it does seem like a good hedge for collapse. I think there's more to say about all that, but that's a short summary of what's going on right now. And you said something interesting too about the leverage. I think that's what happened with a lot of people. A lot of people got wrecked, and a
Mm,
lot of I think companies, same thing, just on a bigger scale, more in like the venture capital world. People were borrowing money, and they were spending and doing all these kind of crazy finance loans and investing loans and all kinds of stuff in that world. And I think what happened is a lot of people got called out, and a lot of right now in the news, you hear all these companies going under, and it is legitimate. And what's fascinating though is that it really, when looking at cryptocurrency as something to invest in, people are really skeptical. So I get relatives and family members and friends are coming up to me like, "Oh, I read in the news like everything's collapsing and all this stuff." And but then on the flip side, with people like at my work, we have financial analysts and people that have been in the space for a long time, and everyone's like, "Oh yeah, of course Luna collapsed. Like that was a scam, or that was like people thought
mm,
these things were janky in the first place." So I think there is some some expectingness for people who have experience in that space already. Expectingness, I don't know if that's a word, but people like they expect it to happen. So I still think that Bitcoin is, a reasonable investment. That's the short. Again, not financial advice. I don't know if we said that. This is for entertainment only. So please, but I still believe in Bitcoin, and I don't want to go too far off this path, but I think it kind of is a nice segue into right now. When you look at Bitcoin, and then there's something like 9,000 other cryptocurrencies out there, and you think, which project is good? Well, in the bull market, everything is popping. Like everything's like, oh, that went up 3 times, that went up 50 times, that went up 100 times, like crazy stuff that
mm.
sometimes went up 1,000 times, and everything's looking crazy, crazy good. And then when this bear market comes, it's kind of like a true test, like what things were sort of vaporware and just sort of vanish, which things were scams, and which things were really true, had true value to them. So Bitcoin itself, it's funny. So somebody who calls himself a Bitcoin maximalist is someone that believes that Bitcoin is superior than all the other cryptos, and it's fascinating because I wouldn't say I am that, but in a bear market, I am a bit more like that. So
Mm.
I think right now everyone's cutting, they're cutting employees, projects are folding, all kinds of crazy stuff is happening, and it kind of brings you back to the utility of Bitcoin as being a good, a decent, actually, I think in general, a good stored value with the information that we have now. Um, Maybe I'll stop there because I kind of said a lot of things, and we can go back to some of the questions that you might have, but maybe I'll stop there for a sec.
Yeah, sure. Let me pause real quick. Um, Could you give us like a real simple like beginner breakdown of what cryptocurrency is and how it works?
Yeah, I think that's a good place to start. So the idea of cryptocurrency, maybe we'll back up a little bit. I believe it was in the 90s that somebody made something called blockchain, which a lot of people have heard about now.
Hmm.
And the idea was it's a ledger. So if you're accounting, you kind of know what a ledger is. If you're not, you could think of it almost like an Excel sheet that just has numbers of who owes what and what's been paid and what's in debt and what's a gain or a loss or something like that, who owes who money. It's very simple record keeping. Well, if we have a copy of an Excel sheet or we have it on the cloud somewhere and it says Ryan owes Andrew money or Andrew owes Ryan money or whoever, our friends or whatever, somebody could like change it and maybe we don't know, or someone makes a copy of it and they mistakenly or nefariously, people can change records. So the idea of this blockchain thing, blockchain meets cryptocurrency or meets cryptography, excuse me. So you throw in really smart people that add cryptography and encryption to this type of ledger. And not only that, but also instead of everything being on one centralized source on some Google server or somebody's computer or something like that, it's spread across globally amongst a network of computers that are running the software. And typically those are called nodes.
Hmm.
And the the ledger needs to be verified on many of these, and if it finds something is weird, the network is going to be like, you're doing something fake. This isn't real, and it kind of blocks you. So the chance of it getting hacked is extremely small. No one's really figured out how to do it, but people kind of say use the word immutable. It's something you can't really change. So if you imagine a technology that has record keeping that is near impossible to hack, somebody thought of this. Satoshi Nakamoto is the name, which is probably a group of cryptographers, they think. But there is a group of cryptographers that were involved in the making of this. And the founder, Satoshi Nakamoto, vanished, so people don't know if he was real or not. But he had this brilliant idea to say, well, what if we added finance or a financial asset, a currency into this technology? Because governments, if you're not a fan of fiat currency, you probably know about this, but governments in fiat currency, they tend to inflate or deflate, and that's their tools to kind of control, I guess, generically saying supply and demand. And um, it's kind of not good. So if you have like $100 and the government inflates the value or deflates it, you don't have control, and you can't predict of with what's going to happen with your money. And right now, like inflation is a great example. You have your money in the bank, it's basically just losing value. So somebody said if we use this technology and we make a currency with it, and then built into the currency day one, where no one can change this, is there's 21 million coins, and
Mm.
those coins are mined by computers and electricity. And um, I won't go too much into that, but they're mined using electricity. So some people could say they're technically made by electricity. It's technically electricity and computing power. And somebody earns this, a miner. People we don't see. They're people who have like big mining farms, and they basically looks like a bunch of like data servers and boring stuff like that. But they generate them, and it's similar to like somebody mining for gold. And that goes to like kind of finish this explanation. I think this is another good example of why I think it's better than something like gold or currency. So gold itself is a good example because that's kind of always been a traditional like hard asset that you keep, and it's kind of like, oh, it holds value. But anytime they open a new mine across the world, all of a sudden there's more gold into supply, and the government can change numbers on their computer and they can add more to the supply. So 21 million bitcoins is a set number. So once they're all mined, that's it. You can't inflate or deflate it. So this is kind of more of a personal thing, and people have written about this. But you think conceptually, the government is involved in so many things, and inflating and deflating whatever, and they're bailing out banks, and they're bailing out housing markets, and they're bailing out all these things. How do you know like the true value of something? So when they say that they understand what you know the inflation rate is or other things, I'm extremely skeptical because you they take like a bucket of stuff and they put it all together and they can kind of change that bucket, but in reality, you may not know. And sometimes I think sometimes the crashes help figure out, with the supply and demand, figure out where things really are, but sometimes you don't know, and so everything's like going all crazy. So the idea of having something that holds a true value, that can't be inflated or deflated is ideal to me. And right now, it's very Bitcoin is still volatile. It's not as I don't know. I mean, these kind of 80% drops, I've seen it happen so much, so it doesn't even like bother me anymore. You do have to have like a strong stomach for it that you develop over time. I think just going
Mm.
through the cycle enough, it is a roller coaster, and you're kind of like, oh, I see the big fall is coming. That's fine. I know it's going to go back up later, or at least most likely will. But I think there's a couple of things why that happens, and one is a lot of people are using leverage. People get scared, right? You see everyone's getting laid off. People are
Mm.
starting to pull their money from assets because if I own real estate, or if I'm just a regular person that doesn't even own real estate, but maybe I have stocks in crypto, and all of a sudden I need to think about moving to a cheaper place or lost my job, probably the first thing that's going to come out is crypto also. So that's another thing, another factor. Another factor is I do think a lot of these big banks and big investors have been getting into this space, and they'll write articles saying how they hate the space, and then soon after they'll get in, and you have to wonder, are they just like trying to mess with the price so they can scare people? They tell their customers, don't buy this is bad, and then you'll read a press release how they bought like 100 million worth of Bitcoin or something. So you can find instances of this in very well-known establishments. So they're buying that stuff, and I think they right now some of those big they call them whales can kind of move it a little bit, and
Mm.
there's games. They'll move a bunch of stuff, try to scare people. There's that, and there's all kinds of other weird things. And I kind of gave up trying to figure out why. I do on a surface level, like I like to hear what people say, but as far as passionately trying to figure out the why it dipped that particular time, there's all kinds of weird things that go on, and I see people have charts for how many people are mining that month, and how many
Mm.
people are long-term holders that month, and there's so many factors. But I still think long term, I still think it's a good hold. That was a lot of stuff right there, so maybe I'll stop. Excuse me if I went off
I
track,
mean,
but
you ended on a good spot there, which is you're in this for the long term. You're not in this to try and guesstimate what the value is going to be like next week or next month.
yes, and that for someone getting started in this, and we can talk more about this, the specifics of it, but I would really encourage people if they have even just a little bit, and I think what you said before is good, something around maybe it's 5% or a little bit less of your investment portfolio. That's what I recommend for people that are like new, like friends that want to get into
Mm.
that. I think it's more important. I'm more passionate about getting people started than trying to get them to put their life savings into it. Uh, I think that once you put money into the game, then you start paying attention. And it's like just
Mm.
go to somewhere like Coinbase, one of probably the easiest one. Maybe not my favorite, but they're pretty easy. And like if I want a friend or somebody to get started right away, they're probably the go-to one. They're on the stock exchange. They have an IPO, and they're one of the longest, most established companies. And when I first used them, I think they only had Bitcoin on there, and it was the only thing to buy. It's just
Mm.
really funny. And now they're like this huge company. It's been fascinating. But I would recommend them go just buy like $100 of Bitcoin and understand the process and pay attention, because once you have money in there, you start paying attention to the price, and you start wondering how the wallets work, what are
Mm.
these other coins. So I think just getting your hands dirty, I would rather have like a lot of people get a little bit into crypto than like have one friend make tons of money, which could be nice too. But I think it could be a big part of our future, and I would really love for people to not be part of, not to miss out on it.
So to jump in real quick, I'm sorry.
Yeah,
For me personally, I'm not putting money into crypto expecting some kind of giant gain. Like, although I have made money off of crypto, like I've made money off a lot of my investments. Most of my investments, I look for some kind of exponential growth through compound interest over an extreme amount of time, like 30 years. For crypto, I'm more interested in it in terms of a different currency. And I think that you pointed out a really good argument, which was that most currency is inflatable, meaning that new, um, dollars or the gold amount could just sort of be created at any given point. And we know the U.S. government kind of chucks fake gold into the system to kind of change the value of gold a little bit. And historically, money has been trusted, whatever money we're using has been trusted due to its rarity and its trustworthiness in the amount in the system at any given time. Right. And so for me personally, I'm more interested in crypto in terms of actually having a currency for exchange. Do you see that being more common coming up? Like, are we going to be able to spend Bitcoin like at fast food joints at some point here?
I think that a lot of people have tried it. You hear stories that there's so far 2 or 3 countries that have accepted Bitcoin as their main currency, which is pretty interesting.
Hmm.
And that's been a big argument against Bitcoin, as people said it's not practical. I think it changed from a currency to it mostly being used as a store of value, as almost, and people call
Hmm.
it digital gold, is something. Some people have pushed for it. I think it's Jack Dorsey. I think it's the Twitter CEO that was trying to push for more payments, because you see you see places like Square and Venmo and PayPal and all these companies starting to adopt it more. So I think
Mm.
we are going to see some form of that more often. There is one complaint about Bitcoin itself is, and this is kind of a good intro into some of these networks, and then I want to bring it back to about why investing and how the philosophy is to kind of answer your question. But Bitcoin was made, and then of course, as humans go, well, what if there's something better? So people said Bitcoin's kind of slow; it can't handle as many transactions at a fast rate. So
Mm.
we make Litecoin, and it's like sometimes it's code copied from Bitcoin. It's like a source code that's copied and modified or changed, and then people did things like Ethereum, which is the second most common crypto. I mean, I think at least if someone's going to get into this, at least learn about Bitcoin and Ethereum at the very least.
Mm.
And Ethereum is sort of like Bitcoin, but somebody said, well, what if we can build applications on top of it that are decentralized and not run by one person, and you can do loans instead of getting a loan from a bank, it's from another person, and you don't know who person, maybe you don't know who person A is, but the network can verify that you have the funds and you can loan them out and get a certain rate back. There's all this kind of interesting stuff happening on Ethereum,
Mm.
and there's more to say about that, but I think I'll digress a little bit. So those are the two things going on. So we have all these other um, cryptos that some are more focused on trying to be transactional. So
Mm.
it wouldn't surprise me if Bitcoin kind of remained as a store of wealth, like digital gold, and then other there's things like Dash was around really popular. There's other coins like Monero, which is a privacy coin that's supposed to be like not traceable. And then as one of your other podcasts or one of your other interviewees that you had, he talked about, um, what was he talking about? Sorry, this is probably something that has to be edited out. I kind of blanked, but
That's okay. He was
so
talking about the government coin.
yeah, so something like the government coin where everything it's like the opposite of what cryptocurrency was kind of designed to do, where everything is like trackable. And anyways, so I think there's other cryptocurrencies that may serve that um, serve that purpose. As far as investing for myself, I recommend to friends and family again, probably something like 5%. Scale into if someone has I have $5,000 to start, I would recommend still okay, put in $100, understand it properly, and learn about Bitcoin, Ethereum, and then if you get more into it, get into other coins. And if someone were to say, like, I don't have time to look into what's good, I would just say maybe scale into Bitcoin and Ethereum and constantly put a little bit in each month. And so it kind of averages
Mm.
out the price because instead of trying to find the highest or lowest, the only thing I may say that if you wanted to be a little extra savvy is if the chart is like this and it's right here, maybe just don't buy right there. Maybe wait till it's not the very highest point. The chance every time you go to the highest point, the chance of it reaching there again is kind of low. Um, it's pretty low right now, and I think if something's a little bit more advanced, you could probably wait a little bit. It's right now we don't know. This is time the market with anything is just insane, and I think that if it's like maybe a year or two, maybe we'll count that as short term.
Mm.
I did have luck in the past doing shorter term trades, but I had been involved in the space for like 5 or 6 years, and I was like watching tons of day trader videos, and I was spending so much time on it that it was to the point where I was like, do I like try to quit my job and do this because the amount of time it took was also getting absurd, and it's
Mm.
not a guaranteed thing. And I did have some I did have when it's a bear market, it's a little bit easier to predict because it's a lot of social behavior. And I think with I look on Reddit, I look on Twitter, I look on all stuff, and I look on YouTube and what are people talking about, and um, I tried to look where the momentum was, and I did get lucky with some things. Like, I heard that Elon Musk is going to talk about Doge on SNL. It's like, okay, that was a total buy the rumor, sell the news. It was bull market. everyone was hyped up on Doge and it was down, and I'm like, I'm buying in. Then like within a week, I made like 4x or something, and then I got out like right away. And so like in the bull market, if you really know the space, that can be fun. But again, I didn't put all my money in on that. So if I do anything like that, that's sort of a gamble. It's like a very low percent of my portfolio. It's going to be like
Mm.
less than 1% or something. Same thing with like leverage stuff. Like there's so many things that you can learn about that are fascinating. But I would recommend people to not be scared of all that stuff. Just kind of like put off to the side, be like, I'm not going to mess with that. I can learn
Mm.
about it later. But all I have to do is open up a coin, you know, sorry, coin, what am I thinking of?
Like a
This exchange,
brokerage on Coinbase or Webull or
coin,
something.
sorry. I think someone should just open up a Coinbase account and just get started and then slowly scale it. It takes a long time to really learn about this stuff, and I think it's more of a long-term thing also. There's a guy named Michael Saylor that I really recommend watching on
Mm.
YouTube, and I think he owns some of the most Bitcoin, at least with his company and MicroStrategies, and they have like there's so much Bitcoin, it's just utterly insane. And he is great. He makes great arguments for being a Bitcoin maximalist and why everyone should own Bitcoin. I'm not saying that what he says is true. I don't know, but it's good to understand the argument for why someone would want to go in on Bitcoin. He claims that it's the best investment ever, and he
Mm.
claims he thinks it's better than real estate. I'm skeptical, but it is worth watching because at least you can understand that side of it. And that goes into, there's sort of a lot of hype about cryptocurrency and Web3, and it's going to be the utopia, saving grace for our society and stuff. And anytime that happens, usually it doesn't work out that way. So I think it's going to be kind of a hybrid. I do think Bitcoin and some type of crypto will be around. I'm thinking at least in the next 10 or 20 years. But technology is crazy, and I remember when I got an AOL disk online and to go online, and people were like complaining that people were on the internet for 10 minutes at a time, and that those are real conversations that happened. So crazy stuff can happen, and it's very unpredictable. But if you think about Bitcoin itself as being a store of value, that it can't be inflated. And I think as more people learn about it, I find that as more people learn about it, more people like it. And bigger
Mm.
companies are starting to put money in. And the value, I think it was like a 3 trillion market cap or something. And recently, I think it's been under 1 trillion because a lot of people are moving their assets around, they're scared. But you can think about all the money in real estate. I think even derivatives, it's estimated to be like 2 or 4 trillion.
Mm.
Whoever knows, but it's some crazy amount. Gold is like 8 trillion or something. It's something like that. But you kind of get my point. So you can imagine all this old money in old places and old systems, and they're going to start. They might start saying, "Wait a minute, Bitcoin keeps getting like these crazy like returns, and other businesses are doing it. But maybe I should move some of this money in." So you can easily think, well, if Bitcoin's $1 trillion market cap and it's at 20,000, when it goes up 3 trillion, it goes up to around 60,000. And you can imagine if it can easily go up to 8 or 10 trillion in theory if some of that money comes from gold and real estate and other places. And then you can imagine easily, 200 or $500,000 Bitcoin. It's not. It doesn't seem. It used to seem really crazy to me when people said that. It was just very nebulous about why it can become that price.
Mm.
But when you read about it, it's like, oh, the numbers actually make sense. It's just if people adopt it as a store of value, it becomes popular. And people like Michael Saylor, this guy I talked about, his thing is accumulate as much Bitcoin as possible, never sell it, and you will eventually be able to borrow against it.
Mm.
It's true, you can borrow against it in some platforms, and some of those platforms are becoming defunct now. So,
Mm.
but you hear things, I think it's Fidelity, but some of these bigger companies are trying to add Bitcoin into their 401k. So, it's coming, and I think it's not going to stop. And I think Bitcoin is, in a sense, like first to market. So I think if you're going to get into cryptocurrency, just putting a little bit in every month or every couple of months and then just kind of closing your eyes may be like the best thing for a person that doesn't have time. And I would really encourage anybody that has at least a little bit of extra money to do that. Like instead of like buying so many lattes every month, maybe just do that. And that's kind of my short take on that.
Like a good starting place would be for 1 month, cut down on the lattes, or I don't know if you've watched Minority Mindset, but skip out on the guac at Chipotle, and then buy a little bit of crypto just so that you can get your feet wet and see what it's all about.
I think so, and if somebody's having trouble putting money in to invest, and you asked somebody recently, they had $1,000, what would they do? And your guest said, which it makes sense, is save that for emergency and keep building up. I think one thing that inspired me, I got so into investing and the returns that I saw from crypto that it made me want to. It motivated me finally to try to make more money, and that made a career change for me. And I think it's much faster than people realize. It may take a year or two. You don't necessarily need to go to school for 5 years to make a career advancement. You might want to look at your skills and find jobs that are. Sometimes I find people are doing like 5 jobs and they don't realize there's a title for what they're doing for just one of those
Mm.
jobs that pays more. So I think people should research on LinkedIn what their current skills are, and then maybe fill in some gaps, and then try to jump ahead that way. I think that's the easiest and quickest way for most people to try to make a little bit more money. I know it sounds crazy, but I do think that's a good way for a lot of people. Um, but yeah, trying to generate more income to invest, and yeah, that's my
I
short.
have I have read recently, and I could be totally making up data on the spot, which you know, uh, hopefully that's not the case, and maybe I'll find the article and I'll toss it into a video in the future. But the higher the person invests from their actual like W-2 job income, um, the more that they make over the course of their lifetime than someone who lives paycheck to paycheck. And I think you pointed out a really good point, which was that it tends to be when people start investing money and they see the growth and potential for what that looks like, they suddenly become much more creative in ways that they can get money,
Mm.
right? Because same story that you just had for me, which was like, if I'm just living to survive, I'm just living to paycheck, then and I'm happy with where I'm at. What's the point? But then as soon as I start investing and I saw growth from that, my next thought is, I want this next real estate deal and I don't have the money for it. How do I get the money for it? And then my mindset has changed so that I actually make more money now than I did before for exactly the same reason. I think that was a really good point.
Yeah, and that's why I like people to just get started, because if they can get their feet wet, they can get kind of hungry and get um, out of their stagnant lifestyle. Because I hate seeing friends and family, and I've been there myself when I was
Mm.
younger, seen as no opportunity for your future, how to invest or how to move ahead. And one thing I like about cryptocurrency is it's kind of fun. It's still kind of got a little bit of a rebellious edge to it, kind of a renegade thing going on. And it's fun. It's got a lot of cool stuff going on. You're kind of still part of the first people to do it. I mean, even though it's more and more in the news, you still think all tech is like that, right? How many people were really using the internet at the beginning, or they were barely using it, and then all of a sudden, it was all the tech nerdy guys. Same thing with something like Tesla or some of the Apple stuff. It's always these early adopters that everyone laughs at, or they say it's the devil. The technology is the devil. It's evil. It uses too much power. It does this, and there's all these complaints about it. And I'm not saying none of those are true, but it's definitely, people don't like change. A lot of people don't like change, except for those early adopter, innovator mindset people. So you gotta. I encourage people to not listen to that. Secondly, this is not, it's kind of going off track, but somebody told me the other day. They said, "Wow, this stuff sounds fascinating. Okay, I'm going to come back to you, and in like 2 or 3 years, if it's still doing well, then I'll start investing with it." I'm kind of like, every year you wait, it just goes up, and you're okay. It does go down sometimes, but on average, it becomes harder and harder to enter at a lower price. So that's why I think people should should start now with any type of investing. Another thing I like about crypto is someone can start with like $10 and see how the process works.
Mm.
Versus real estate is obviously kind of a more it's a little bit more of a dedication to. I still think real estate. Obviously, I haven't done it, so I can't give a fair assessment but from people like you and from friends and family that have done it a lot, it seems like one of the most if you're smart about it, it seems like one of the most secure and best ways to build wealth for a family. It just and for yourself, it seems like one of the best. I mean, homes are well, it's hard to they can build more homes in like Nebraska or something, but if you have like nice places where the real estate is and it's where it's hopping and there's a lot of infrastructure there, it's like that's a great thing to invest in. So you're kind of almost investing in infrastructure in a way, I guess. But I still think real estate is great, and I'm looking to get into it. But I like crypto because people can start quickly. Of course, it's really easy to lose tons of money if you're very emotionally driven.
Mm.
And I think this was interesting. So I was, telling you before that, as I went through a cancer experience myself, and
Mm.
I read this famous book called Thinking Fast and Slow. And I don't know if you ever heard that, but it's great. It's a great book. And this guy he won the Nobel Prize for it, but him and his partner found all these fallacies and cognitive errors with how people thought. And what's alarming is a lot of it was in statistical research and like some of the top minds, and they still will make some real small logical fallacy that cascades into big stuff. And one of the things they talk about is going to the doctor, and if they have all these crazy treatments that may not work or whatever, it's better to just put your emotion out of it and say like, what's statistically the best thing for my treatment. And when I went through cancer, all these people were telling me, oh, go to Mexico or eat this thing or go and like crazy stuff. And then when I went to my doctor, I just said, I took my emotion out of it. I'm like, I'm glad I read that book because I
Mm.
want give me statistically what the best treatment is, and that's it. And I'm just going to trust you with that. And he's like, okay, good. And my luckily everything was successful. But I think it's kind of a good thing to treat your investments like that. And even someone like me who's been in this space for like 7 or 8 years, and I see crypto go up and down, I'm like, oh, like I want to do this stuff. And when everyone's freaked out, it's usually a good time to buy. And one example I would use to finish this
Mhm.
up is it was around 2020, and I had just gotten some work bonus, and I paid off some debt, and then I had some left over to invest, and the Corona thing happened, and it was scary. And it's funny because right before that happened, I was thinking, okay, everyone I know is like getting raises. There's a bunch of hiring stuff going on. Like I'm feeling like it's a little like too good right now. Like I felt like something bad was going to happen, and it was just a coincidence. But it just goes in cycles, and I just felt like I feel like there's going to be some crash or something of some kind. I didn't expect Corona, but Corona happened and everyone's freaking out. I knew so many people that were losing jobs,
Mm.
and I saw Bitcoin go down to like $4,000 or $5,000 or 3,000. It got so low, and I was like, oh my god, like my emotions are so scared because I don't know what my future is. But I knew investing wise, I'm like, if I took my emotion out of it, I'm like, I don't think, from my experience, from everything I know about this, I don't think it's going to go much lower than this. So I bought a bunch, and I told everyone I knew, I'm like, if you have money, you might want to buy Bitcoin now because I don't think it's going to be this low, maybe ever again. And then I bought some, and it ended up being a good return because it went up to around, I got it at like right under 4,000 or something, and then I went up to like 67,000 pretty soon after. So, and I
Mhm.
did take some out. So that is I don't do that as much anymore. And now I'm more like, if I see it really low, I might put in a little bit extra, but I'm trying to not do any type of day trading stuff. I think you get wrecked so many times. And again, if somebody is going to dabble in that stuff, it's really fun. But you go to like Wall Street Bets and you see these people just get wrecked with all kinds of stuff, and it's like
Mm.
it's really depressing. And you got to do like that statistical thing, almost like you have cancer or something. Like, what's the best treatment statistically? What's the best investment? And if you've got kind of that risk gambling side, I think it's fine to entertain it to a degree in that, but you set that limit. It's like you go to Vegas and you're saying, I'm going to have fun, but I'm only going to spend $300 or only at 500, whatever your thing is, and you accept that that's your limit. So I think it's okay to do that in the crypto world as long as you have that control. Otherwise, better to just set up some automatic deposit and stuff, which all the platforms pretty much have, like Coinbase. You can say just take out $100 every month or something, and you just let it go and you don't look at it, and for like at least like 3 or 4 years or something like that.
That's a good call out. So, we recently did a reaction to the Dave Ramsey video where they pointed out that there was a crypto investor who leveraged a whole bunch of money to buy a bunch of crypto and then ended up going bankrupt. And he went from like being a millionaire, fancy cars, fancy house, to having nothing. And I think that they kind of just equated that with like, see, this is how bad crypto is. What would your argument be in response to that?
Um, I would say like leverage is like it is like I don't know. I guess for this guy, it'd be like going to your taking your life savings to like a slot machine or something. And you might hear of the survivor fallacy. You might hear of like one person out of 10,000 that got lucky. But statistically, you just got to think about there's so many factors that um, it's like the chance that you can predict when it's going to go high and low. And I've messed around with some of that leverage stuff. Some people who I'm not saying I've done this, but some people may get VPNs and go to and use certain countries' exchanges to do these kind of things because the U.S. doesn't allow a lot of this stuff.
Mm.
But you can dabble in leverage and that kind of thing. But if you actually do it, you'll see that it's totally insane. You can set it up to zero, and some things allow up to like 100. But I think what people think is like, oh, I think it's going to go down. And so like, okay, so you got 50-50 chance or something. Like it's like putting red or black on the roulette table or whatever. But it's not like it goes, oh, it went down. It's like it goes like this, you know? And it's
Mm.
like and there's people that see, though they might see like how many calls are at certain prices, and you just get like wrecked. And people have software and all kinds of sneaky things that you don't know about. And how do you trust the platform?
Mm.
They could be selling some of that data. There's all kinds of weird stuff going on. So prepare to get wrecked is my thing of messing with leverage. It's treat it like a freaking slot machine. It's like entertainment. It's fun. You get lucky. That's cool. But don't put like your real like
Mm.
it's like your future. It's like I can't believe that guy did that. I can't believe the guy did it. Our emotions go, and if you've ever done something like a slot machine, you feel that, oh, I keep winning, I better keep going more. And now obviously that's how they make their money. It's because they know that eventually the odds are against you, and you will hit this rock bottom low and lose all your money. So yeah, I think um, it's funny because I definitely have a little bit of a risk side of my personality, but for some reason I'm able to turn it off in crypto, and I'm able to think about my future. And if there's something I don't know about, I try not to mess around with it. So I try to really learn about stuff. So everything I've done with crypto, what I learned about has been pretty good. Everything that I didn't has been really bad. So like it's like pretty highly correlated. Like I'd say like 95% success when I really spent a lot of time and understood it, and then the inverse too. One thing I will say is like somebody looks into these things more. If you hear about people making lots of money, they are usually these top coins, Bitcoin, Ethereum, and Cardano and stuff like that in the top 10. You can kind of think of them as Facebook, Amazon, Google. They're kind of stocks like that. So they're more established, and the chance of them going up as many times as something that's maybe in the top, or like I don't know, it's like ranked number 500 or 1,000.
Mm.
So obviously, you can think of like the smaller projects that are really low down on the crypto list, and you can go to somewhere like CoinMarketCap, and it has the market value, the market cap for each project. And so Bitcoin and Ethereum are on the top, and the chance of one of those doubling, you have to think, okay, if there's a trillion dollars in Bitcoin, as I said, and for it to double, another about $1 trillion has to come in. So probably a lot of retail investors or big companies buying, 100 million at a time, which does happen. So you have to look at it like that. And if you go in a small market cap, like you see some, whatever it is, number 1,000 is a project that is only valued at, you know, maybe like 100 million or something. Well, and you see like it's a competitor to something at the top, and you say this project has good. You look at their website, you research, you find out they have a big team, they have real customers, they have all this stuff, and if you think of it like investing in a company, you can go into it. And again, I still think diversifying your crypto portfolios is an okay thing if you're willing to spend the extra time. I still recommend most
Mm.
people, start with something simple. But if somebody wanted to get more elaborate, that's where you hear these kind of crazy stories. And I would recommend it. It'd probably be something like it's 80% Bitcoin, 10% Ethereum, and then the other 5 or 10% is for these projects that you research that you think have some
Mm.
potential. But I still think the majority should be probably in the top two coins, especially in like this bear market. And the reason is most people are using Bitcoin as a store of wealth, and most people are using Ethereum to build Web3 applications on. And if you look and you research, a lot of the biggest networks and a lot of the biggest projects are on Ethereum. So
Mm.
the chance of all of them leading to somebody else, even if there's something better, which all these other ones right under it claim they can do better, it's very unlikely. It's like, can you imagine um, all the iOS app developers for the App Store all of a sudden just randomly go into another place that says they're good? I mean, it can happen. People left Friendster from MySpace and MySpace for Facebook and the TikTok. So things do happen, but I think the development world, takes a little bit longer, and there's a lot of I don't want to say sunk costs, but there's a lot of writing on Ethereum working, and there's a lot of projects building it up.
Mm.
So back to my point though, and then I'll digress out of this. But one of these projects, say it's a competitor to Ethereum, or it's something that is important to the ecosystem. You research and you say, okay, this project 1,000 or whatever it is seems really hot and it seems good, and I think it's gonna whatever in this next year it's gonna do well. I don't think it's gonna collapse, so you can put some money into it. Well, if it becomes popular and it gets into a top 10, you can understand. Oh, so the market cap went up 100 times or something. And I think the most like I've gotten into products that went up like 30 times or 40 times, which is insane. And when I first started doing crypto stuff, and it was around 2017 or 18, and all these projects were going crazy, my friend and I at work were like, oh, this one went up 10 times. Oh, this one went up 15 times. That's pretty good. Not realizing that this was like a once in a lifetime opportunity to make insane amount of money. And talking about, you want to be ready for opportunities when they happen. That's why I want more people to be involved with crypto. But if somebody really wants to get more into it, there is potential there. While the market's really bad, that's usually not the time. Usually you see all this stuff happen when people have keep putting in money in the stock market and everywhere, and they go, oh, I'm bored, I want to try something else. And then Bitcoin's doing well, and they go, well, Bitcoin's doing well. Oh, what's this Ethereum thing? And they put more money in Ethereum, and they go, oh, well, like, what's this Cardano? And what's this? And then it keeps going. And then the stories get more complex, and that's what tends to happen. And then all of a sudden, it's a story of decentralized finance. So, like, what decentralized finance application in crypto is going to be the next one? And then there's gaming, and like, what metaverse coin is going to be the next one? And then
Mm.
it starts getting into weird technical stuff like, oh, there's insurance for the DeFi apps behind Ethereum. And then there's these layer two protocols and ZK rollups that put the transactions into a batch. And those are going to be the next big thing. And all of a sudden, the story goes out. And then people are like, that's the next thing. And then, like, it starts collapsing. And then before you know it, like, these ones are, and all those weird ones that I went into that were weird infrastructure stuff, just like I lost money on all those. Like, and I think it was a good lesson for me is I think understanding what game you're playing, and I think
Mm.
this is probably good for any investment. But right now, my game is, and I could be wrong. This is my personal belief from everything I've read and studied. I believe that Bitcoin is going to be an interesting and a good store of value as an asset, and I think it will continue to appreciate. And I hope to continue to accumulate and borrow against it. It's not the only thing I have. I have 401k and other things. I wouldn't, as much as I love it and believe in it, I don't put every single thing in there. It's new, and we don't know what's going to happen. So, um, but I do believe that more people, more companies are going to invest in it because I think it's proven to show its resiliency.
Mm.
So my game is long term in that, and that's fine. But and you can probably find people that look at Bitcoin, they're playing a game of how many miners are there, how many long term wallets, and like every time it goes through this part in the chart, it dips and it does this, and some people do that stuff. It's a lot of work, and the chance of you figuring out the right puzzle and the chance of that staying consistent, because if that pattern stays consistent, people figure it out, and then you got to look for some new pattern. And that's one thing I've noticed a lot with trading this stuff. That's why I do think like the most realistic thing, and you got really, really smart people out there and software and all this stuff, and even they can't figure it out. It's like the chance of you figuring it out is very small. So I still think like, hey, oh, and here's one last thing I will say. I did get lucky with some projects that went up 20, 30 times, but Bitcoin long term, in the short time I was in it, I mean, I started getting in, it was around 1,000 or something, and went up to like 67, and I took some out when it went really high. That's another thing is you can, if you see a crazy return um, in crypto, I mean, seeing something go up like 60 times, it might be a time to take some out. So that is one thing you can do with taking stuff out is when it scales really, really high, it's a good idea to take small amounts out. And some people have it set like on the chart, and they'll be like, if it gets this high, I'm taking a little out, this time, a little out, this time, a
Mm.
little. Again, the other thing is just put it in the Bitcoin because you believe in it, and then just go like this. And I think that's probably the best for most people. I really do recommend doing that.
I like
Anyways,
taking out my initial principal when it
yes.
gets to some kind of X of something, because at that point my initial principal is almost negligible against the overall portfolio anyways, and then whatever happens after that is just like free, you know.
That is a great philosophy. And I don't know if I heard that from Warren Buffett or something about, but I did that in my, some relative who traded stocks for years told me about that. And it is interesting. I did listen a lot to experienced traders in the past, and because I realized I didn't know what the heck I was doing. And they're like, you got to, I'll take out your initial thing. And I didn't want it because I was greedy, but I did. And it was so nice, man, because you're like, okay, everything else is just gravy, and then you can use that money for another investment. So yeah, I think that's a great
Yep.
that's a great approach. Yeah,
Go plant another seed somewhere else.
yeah, yeah.
All
I
right,
rambled a
well,
lot. I apologize. I don't know if
oh,
you have
no
any
problem. I
questions.
think we covered a lot of our topics. Is there anything else that you want to get out before we close up?
Um, no, I hope it can help people. I just like to, I've missed so many tech opportunities in my life, and I missed the .com thing. I missed. I was in the music. I tried to be in the music industry, and MP3 happened and decimated the music industry. And there's so many stories that I missed of, and I think that the technology has allowed an average person to get involved in something that is, I think, a life-changing event. I do think crypto is going to be an amazing thing for the future, crypto and blockchain. And if you read a little bit about Web3, get past the news. Like, don't, news is trying to hype you to be scared or do whatever.
Mm.
I would say read it with caution and read into how much money is going into these projects. And you'll find every day, you'll see hundreds of millions going into this blockchain project from big companies. And there's a lot of infrastructure being made. And understand that we're at the very early stages, but this is what happened with the internet and Amazon. .com was kind of a joke at the beginning. You can find Bill Gates on an interview with David Letterman, and he's making fun of him and saying, "Why would you use email? That's ridiculous." And he's making fun of all that stuff. So I think this is an exciting time, and hope this encourages people to at least get their feet wet a little bit.
Yeah, definitely. So the two takeaways we can have is one, You don't have to gamble your entire life on crypto to get into it. Um, that's not the only way to invest. And two is just get your feet wet. Just put in $100. Don't think about it. Um, would you say that's about right?
I'd say that's about right. And if you want to start with a basic explanation of Bitcoin, I do think Michael Saylor is a good one, and I understand he has a lot invested in it, so take that with a grain of salt. But I think he makes a very compelling real world use case for it, and kind of an inspiring one. So I think that's worth YouTube. And he has like 100 million interviews out there, so I think that's a great place to start. And then maybe a Coinbase um, account, like $100 or something. So.
All right. Well, I'm going to wrap up there. Thank you so much, Ryan, for stopping by and letting us know. If you liked what he had to say, please like and subscribe. Comment below if you have any questions, and maybe if we get enough questions, we can have Ryan back on and kind of throw him at him and see what he has to say. But yeah, thank you so much, and until next time, thanks for stopping by.
Thank you so much. It was awesome.